Good evening to all our mentorship traders. We have come to the end of yet another week. We're on the 20th of August 2021, 9 p.m. Indian Standard Time, Friday evening. Mentorship Invest Meet. We'll talk about the markets, few sectors, and then we'll also talk about few stocks. But before we do that, we've got some interesting volatile market in our hands now. So what happened this week? On a week-on-week basis, the index manages a flat close. If you recall this rising parallel channel, and the index kind of manages to react exactly from this channel top. That's nice. 16,688, 690, 700. So 16,700 is kind of a round figure, obvious resistance that index has managed so far. And the damage essentially came in with today's gap down. And I would say that it was the move down was primarily with the gap and nothing after that. This kind of a move or any kind of a correction in the tune of 100, 200 points is kind of okay. We should be all right with it. It's a market which has given us a wonderful breakout above that 16K mark, and it rallied one way towards that 16,700. So even if it gives up even 50% of it, it does not mean too much damage to the underlying trend. It's just that traders probably get carried away and they expect that the momentum will continue forever. Nevertheless, what's the view on the Nifty? Well, this is the 75-minute chart of Nifty, and it is this time frame which has given us some nice levels on the downside. First and foremost, let's observe the fact that the first bar, which was the gap down, after that the index didn't actually break the opening low. So it stayed range bound and there was no sign of follow through selling. Neither was there a bounce back which will lead to gains above the opening high. When I say the opening high, this is the first 75-minute bar, and the high of this bar is 16,495, so 16,500. 16,500, everyone, is going to be a very, very important resistance. Even if it takes it out early next week, it will be very important whether it manages to sustain above that or not. 16,500 is the immediate short-term resistance. You can use 16,500, 16,510, 520, kind of a 20-point buffer on the upside. This level is going to be very crucial, very important for the market for the rest of next week and probably going forward. If it manages to stay above that, sustain above that for a day or two, then I think the market will not take too much or waste too much time and hit back to a new life high. On the contrary, if it fails, if it kind of finds itself time and again facing resistance, 16,500, 550, and it's slipping down, then we have to look at levels close to that 200, 350. We had an erstwhile congestion, and we can see that today's low was 16,342. So there we have 16,350. So 200, 350 is 150 points, nice wide range, and that is one that we can expect. Worst case scenario, a retest of 16K or maybe below that. Too early to say. We are 400 points away from the psychological 16K mark. We'll take it step by step. But as of now, the trend is up. The momentum, which was stretched on the upside with a very sharp move, has eased off. I wouldn't say that we have full certainty in terms of the underlying direction of the movement next week. It is very likely to stay volatile. I would suggest to stay low, trade less. If you're trading, keep the quantity less, focus on the risk management, money management, wait for it to pass, and then we can have some nice trending move. As of now, the long-term, medium-term trend is up, so we should be looking to buy on the dips. And the weekly charts, the monthly charts are still fairly strong. We should not change into a bearish mode right now. We need some more damage probably to conclude to that. But the problem is from the Bank Nifty. The problem is from the Bank Nifty because this is the daily chart of Bank Nifty and the index has underperformed quite a bit compared to the Nifty. Of course, it is not even close to its life highs, which was back in Feb 21. And we have seen that underperformance have come in. The index has broken down and it is now in a short-term downtrend. If you take a look at the 75-minute time frame, it has definitely rolled down into a downtrend. Last time it managed to bounce back from this zone, which is close to that 34,300, 33,900 kind of zone. So possibility of a retest of these levels is high. So Bank Nifty may not perform if the Nifty manages to sustain and probably bounce back. On the other hand, if Nifty fails to sustain and it gives away like 16,200, 16,350, 200 and further down, then definitely banks will underperform, in the sense banks will come down more. So if we see some follow through selling and if you want to go short, I think it will make sense to look into banks. On the other hand, if we think that there's likely to be strength, then which are the sectors we should look for? Let's come here and let's take a look at the RRG graph. We did that. We did this in some detail last week and we'll do that this week as well. I have first taken it down to 1 week and I have sorted in terms of percentage change, FMCG and consumer durables. I'm so glad to see that finally consumer durables and FMCG has started to kick in. Especially, we've been talking about these two sectors for quite some time now. And finally, we see that FMCG and consumer durables, these are the two sectors we spoke about last week, if I remember right, are the biggest gainers. So I was just wanted to show you the movement, and that's why I dragged it to 12 weeks, now back to 1 week. So gainers over the last 1 week have come in from FMCG. Hindustan Unilever is the main contributor, and we have consumer durables also. Then we have IT. Then we have the index. This is an interesting point. Then we have the index, and after that we've got quite a bit of weakness, metals. Media is, you know that, and then generally don't want to talk about it too much. PSU Bank, Bob, PNB, we've got SBI underperformed. I was quite hopeful that the stock will give us some movement, but not so. So was I with real estate. Real estate came down over 5% today. Stocks like DLF fell quite sharp. If you notice, okay, real estate is still in a positive quadrant. I'll come to this point in a couple of minutes time, but before that, let me just quickly check the ones which underperformed, I'm sorry, heavily this week. Private sector banks, we've got Bank Nifty, we spoke about that, and auto. Energy also a little disappointing, now goes into the lagging quadrant. Now, if I take a look at the tail, if I increase the weeks from 1 week to around 12 weeks, close to 3 months, I'm now going to sort it in terms of its tail. Okay, and I would like to find out those sectors which are first in the leading quadrant. IT, leading quadrant, rising. What does it mean? Relative strength, momentum of relative strength, both intact, continue to have a bullish bias. If you do not have any IT stocks, you can look to buy on dips. Do not chase breakouts. Do not go short on this sector right now. Then we have real estate. We can see how beautifully it has moved from the lagging, picked up momentum, went to improving, picked up momentum again. Now, real estate, if you notice, in 3 months have gained vertically quite a bit, quite a lot. And it's not gained so much horizontally. What this means is the sector has picked up relative momentum, but it has not yet picked up so much relative strength. So what should we do? What does this mean? This means that going forward, this sector may try to hold on to its relative strength or gain some more relative strength. So it is in a leading quadrant, and so we should continue a bullish bias on the real estate space. Then we have FMCG and consumer durables. We spoke about this at length last week also. It's a good phase in both the sectors. They are in the improving quadrant, going towards leading, so continue a bullish bias. Now comes the weakening sectors. The problem with the weakening sector is this, which I have personally experienced in my career also. What is weakening? It is, now see, this is just the opposite of IT, real estate, I'm sorry. It has lost vertical grounds, means it has lost a lot of momentum. Now it has started to move left, that is, just started to lose horizontal length, in the sense relative strength. Now the issue with this kind of movement is, ideally this should happen. It generally flows clockwise, but a sector or a stock which finds itself in this kind of a strength generally becomes a little volatile and then goes into serious weakness. So metals may give us some volatile weeks, some sharp bounce backs, because it still has some degree of relative strength, right? So even if you trade metal on the long side, couple of weeks ahead, keep them short term in nature. Do not create long term metal positions right now. We've got small cap and mid cap, similar behavior. PSU Bank is very, see, this is exactly what I was telling you. It bounces back, then it starts to come down again. So PSU Bank will be a little disappointing. Pharma has lost significant momentum, not good. Then we have auto, private banks, energy, very disappointing. Bank Nifty definitely gained momentum and then gave down. Media. So none of these sectors, if you honestly ask me, really has the kind of strength in terms of relative strength and momentum, which says that, okay, focus on them. I would stick my neck out and go with IT, real estate, FMCG, consumer durables. No doubt, number one. Number two, we know that banking, private sector banks plays a very important role, a very high weightage in the overall markets. So if the market bounces back, it will have some movement from banks. So this is my approach for the next week. If we get some long trades from this pocket, we should be okay, definitely okay, and we don't mind to hold on to it for some more time. But if we get some long positions from banks, private sector banks, metal, then and auto, then we can take those long trades, but they will be primarily short-term bounce backs to start off with. So if you're taking any long position in auto, I'm purely talking from trading perspective, auto, banks, etc., keep them short-term in nature. The long positions, keep them short-term in nature. Others, we can continue to hold for some time. The other side of this coin is, if the market shows no strength and continues to break today's low and shows weakness, then these are the pocket where you should definitely look to go short. Do not short this pocket, right? So we are still in an uptrend, we are still bullish, but we need to be a little cautious now for the week or weeks ahead, right? I hope this will find some usefulness in your trading decisions next week. Now let's move ahead and talk about the stocks which are there in your radar for next week.